Tax day in the United States is the day that United States residents have to declare their income and file to the IRS, the Internal Revenue Service, so they can figure out how much tax it is that they owe to the government, or perhaps how much tax liability needs to be returned back to the citizen at 0% interest. A lot of people are worried about this day, and this day is coming up quickly. It's less than a week away. And when that day comes, there's going to be a lot of people, they're going to have to pay money to the IRS. A lot of people are going to have to sell some of their assets or dip into their bank accounts or perhaps dip into their crypto to take care of that tax bill, to remove that tax liability. What happens after tax day? What happens to the price of Bitcoin? What are the banks doing right now in preparation for investing into a new blockchain world? And with all of the news that we're seeing, what kind of pressure could be put on the Bitcoin price? Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together we are Minting Coins, your trusted source for crypto news, interviews, and ICO reviews. Thanks for showing up. Tap that like button. It really supports us and it helps other people find this content. Also, if you have any questions or comments, put those in the comments box below so that your voice is heard as part of the community. So there's a lot happening in the crypto space. There's a lot going on. I'm feeling it. You're feeling it. And part of what we're feeling are the losses in Bitcoin. You know, we experienced these all-time highs in Bitcoin, $20,000 Bitcoin in December, and that quickly evaporated. And now we're down to around a $7,000 Bitcoin. We've lost over 50% of the Bitcoin price since the beginning of the year. And people aren't sure when it's going to stop, if it's going to stop, or if, you know, Bitcoin is going to go all the way down to zero, right? Well, a lot of us don't think Bitcoin is going to go to zero. A lot of people realize that there's mining involved in Bitcoin. There's resources being expensed in order to mine Bitcoin, and the businesses that are mining Bitcoin are recognizing that there's a fair value of the Bitcoin token. And not only are the miners and that understanding, but there's a lot of major investment capital coming down the pipeline. There's a lot of developments happening in the technology. There are patterns in the way that people think, in the way that people need to respond to the world, patterns in the way that the world is putting pressure on people, patterns like tax day happening in mid-April every year, patterns like quarterly taxes that people and businesses are responsible for throughout the year, a lot of people in the United States. And with all of these happenings, people are either focused on the price of Bitcoin falling, or they're focused on the speculation of another altcoin mooning, and majority of people who are just fearful that they're not going to see returns, fearful because, you know, they're holding these heavy bags. They invested into these coins that haven't panned out the way that they've been hoping to pan out. And because of that, it's really important to ask yourself, why are you here? What is your intention for the next month? What are your intentions for the next year? What are the decisions that you're making, and how are those decisions going to help you and hurt you short term? How are those decisions going to help you and hurt you long term? Are you here for the money? Are you here for the greed? Are you here for the dollar bills? Or are you here because you believe in this technology? Are you here because you realize that this technology can fill a hole? It can change the way that people have been interacting with each other over the past few hundred years, and can radically shift, can radically lift everybody across the world with this technology. Are you here because you know that this technology is the next level of people trusting each other, the next level of people interacting with each other, and also filling a need in a world where people are really worried about their privacy, in a world where Facebook is making money off of reading your messages and sharing your personal information with advertisers, so then advertisers can focus their messages toward you instead of focusing on delivering real products for a real world that aren't just manipulating our thoughts, manipulating what we think and what we feel, really serving a positive purpose as seen through the many users of society, not just a few individuals at the top. So we're here because we believe in this technology. We are here because we know that this technology is going to fundamentally change the world and change the way that everyone across the world interacts with each other. It's going to give more power to the people, to the users who are participating with this technology. This old world of companies holding all the power is being shifted to these tokens, these utility tokens, or these crypto digital assets. And if you are a holder of these digital assets, then you are now a decision maker in the way that these networks operate, in the way that these networks work. You are now an equal participant with everyone else who is a part of this network. Let it be the Steam network, let it be on the Ethereum network, let it be on the Bitcoin network. The people who are holding these tokens are now equal shareholders, network holders, part of the Metcalfe's law that is going to propel this technology forward, and that other layers of technology are going to be built on top of. So this is a time for people to understand what's happening. This is a time where a lot of people who start paying attention are going to be the early adopters, the early holders of a network effect that has a very tangible digital asset connected to it. And as we're going to see in today's show, there are a lot of major companies, or are many major investors who are recognizing this potential. And once they get in, once they gain their positions, and then we start to reach 5% market penetration, 10% market penetration, 12.5% market penetration, things are going to get very interesting very, very quickly. And because of that, we're hearing these predictions of a $40,000, $50,000, even $100,000 Bitcoin by the end of this year. So with that being said, let's dive into some of the headlines and let's discuss. So I believe we covered this in our last video, but just to touch upon it again, through Yahoo Finance, we have this headline coming out of JPMorgan's Jamie Dimon, the CEO of JPMorgan Chase. We have to deal with the possibility that at one point, the Federal Reserve and other central banks around the world may have to take more drastic action than they currently anticipate. And so JPMorgan is recognizing that there's this threat that the Federal Reserve may have to take different actions than what they're saying. And if they take actions that are just greater than what people are anticipating, it could have huge market consequences all the way down and up the supply chain of money. Now, these ramifications with money, with fiat, with the US dollar, could be in direct correlation with both things like digital assets like Bitcoin and Litecoin, Ethereum, cryptocurrency, and also precious metals like gold and silver. And these aren't correlated in the same direction, they're correlated in the opposite direction, where if there's a huge problem with the money, if there's inflation that's higher than expected, and then the interest rates go up higher than expected, if the value of money is decreasing, and through that value of money decreasing, people are looking for places, safe places to put their money, they're going to look toward Bitcoin, they're going to look toward gold. And then we have this inverse correlation between US dollars, fiat dollars, and these limited supply of real gold and real Bitcoin. So as Jamie Dimon mentions that to their investors, JPMorgan is out there putting out this guide for asset managers. They're recognizing that there's economic advantage with blockchain, and they want all of their asset managers to understand these differences and how these differences can have a huge impact on the revenues that they're bringing forward in this new sort of financial and technology system. And so they say here that blockchain technology is going to bring a radical shift in the way that we think about financial assets and the way that the financial industry will operate in the future. And what they are arguing here is that asset managers need to get off the sidelines, they need to take initiative, and they need to understand and embrace blockchain technology, blockchain information, because blockchain is the real deal. And who is saying this? Keep in mind that this is being penned by JPMorgan Chase & Co., jpmorgan.com, directly from them. And so there's this full report. We're not going to go over this full report right now, but through this, they are detailing what is blockchain, what is the opportunity, what are the potentials and the use cases, how does it save costs, and they get all of this information to help their asset managers get off the sidelines and start taking action, because they don't want to be left behind in what's going to happen and the shift that's going to be happening. Because if they're recognizing, as Jamie Dimon is saying, that there's the very real possibility that there may be issues with the monetary policy through the Federal Reserve and the decisions that they say they are going to take versus the actual decisions that they do make, JPMorgan wants to be able to pivot very quickly into the negative correlated assets, which are going to be gold, it's going to be silver, it's going to be Bitcoin, and it's going to be other blockchain technologies that they recognize have the potential for building that network effect, for following through with the technology, for providing real value in these systems where the token holders are going to be the ones that are going to be wielding the power, not necessarily the stockholders or the fund managers, as it has been for so long before. And we see a lot of different players involved. We know the Federal Reserve is involved. We know the banks are involved. We know the regulators are involved. And here we have the U.S. Treasury, who is also involved, and they're publishing tips for blockchain projects, helping blockchain projects understand what is blockchain, why is blockchain important, and not just speaking to the traditional business people who are new to blockchain technology, but also talking to teams that are all blockchain technology advocates and not having any traditional members on the team who would be able to help them understand what the traditional regulations are, because it doesn't matter if the regulation doesn't fit the new technology or if the new technology doesn't fit the old regulation. It's probably in everyone's best interests and benefit to cross-understand the technology and the regulations so all of this can continue to evolve in the right direction, ultimately defined by the developers, it's going to be defined by the miners, it's going to be defined by the holders of these technologies, because we have to understand with the distributed nature, the decentralized nature, there are many different constituents who get to have a decision with each of these technologies. And within each of these different constituencies, there's not 100% consensus across any of them. And so there's a lot of different voices, there's a lot of different ways that this is benefiting different people, and all of this needs to get hashed out together across individual blockchains and across all the different blockchains as a whole. And we're going to see that moving forward. We're going to see where people choose to migrate to, what technology they choose to adopt, and then we're going to see how that interplays with the regulation at a government level, at a regulator level, at a corporate level, and at the level of society of which we are all a part of. Keeping up with the regulations and good faith between companies and governments, we have BitPay payment processor who's beginning to enforce bans on prohibited activities on their platform. For example, BitPay is no longer going to be supporting any websites or users that have sexually explicit content. They're not going to be supporting anything dealing with the sale of possible narcotics, chemicals, controlled substances, cash, and all sorts of different sort of products and services that may not be authorized by individual countries. And so they're going to be regulating and censoring who is able to process Bitcoin with BitPay. And we think a natural response to this is that we're going to see a greater increase in the interest in decentralized projects, and also people being able to accept Bitcoin and cryptocurrencies directly using blockchain technology, since that's one of the benefits, is that blockchain and Bitcoin at its core is permissionless. And it's just like the internet. When AOL came out, if you wanted to, you could tap right into the internet. You can go through one of several different service providers, but there were several different people who wanted to go through AOL. There's AOL that tried getting everyone to believe and think that they had to go through AOL. And then AOL was controlling what people saw, what people were able to access, because they were trying to filter the internet through their own system. This is an instance where BitPay is getting users to filter through their own system, but we got to keep in mind that Bitcoin blockchain is decentralized. Ultimately, there are no middlemen unless you choose to put middlemen in that process, and it's going to be really interesting to see how this plays out and what counter technology comes out to BitPay. So sticking with the topic of regulations and regulators and control, we have Chainalysis that's raised another $16 million for real-time crypto compliance. And so we know this. We've been watching Chainalysis for a while, that they are monitoring Bitcoin transactions. They're monitoring the transactions of different blockchains. They say that they can conclusively target the identity of 50% of all of the Bitcoin transactions in the world. So, don't think that Bitcoin is private, and default thinking with Bitcoin and the public blockchain is that everything you do is public. So don't expect any privacy on the Bitcoin blockchain, maybe unless you really think that you know what you're doing. But with so much money, time, and dedication being put into blockchain tracking, that it's a really risky proposition to try to hide your identity or your actions with Bitcoin. What's more is that Chainalysis software says they previously only supported the Bitcoin blockchain, but they're saying now that they're rolling out with the Bitcoin Cash compatible tools for their law enforcement and government clients. And it's really interesting, despite the market conditions that are part of the industry right now, they're seeing growth stronger than anything else. It's been exploding, and we've got triple the number of our customers in this segment that they had last year, and the growth is actually just accelerating. Well, the growth is accelerating because these are leading growth indicators into a market that is poised for moving forward with blockchain technology. And so they are just laying down the systems, laying down the investment in the capital, the human resources in having these tools so that as usage of the technology ramps up, they're already collecting this data, they are already monitoring this data, and they're going to have a lot of information to mine and a lot of information to exploit in different ways for private organizations, let it be public-private or private-private, that are willing to pay for the access to this mined data. So what did we just review? We just reviewed that there is a lot of foundation that is being put down there by JPMorgan, by the banks, by the treasury, by corporations that are providing access to Bitcoin payment processing, providing access to the data of people who are processing in Bitcoin. And the predictions that we're seeing have jumped from $40,000 and $50,000 Bitcoin by the end of the year to a $100,000 Bitcoin by the end of the year, by none other than, of course, Max Keiser. And Max Keiser details his case out there. And so he maintains that with the extremely low interest rates prevailing around the world, there's absolutely no incentive to save. And so people don't understand saving, they don't understand money, they don't recognize the risks of mass inflation and how the value of their dollar is continuously decreasing. Goods and services will cost more money in the future, and it's really scary, the setup that most people are in. What's more is that he's saying that we are in this unstable, unsustainable bubble which has been created. And so he calls it an economy of artificially inflated stocks, bonds, property, and art. And he maintains that gold and Bitcoin are going to be outside this system and are going to be accelerated to success as this bubble, what he's predicting, is going to pop. And he's saying that when that pops, that's going to help propel the success of Bitcoin and gold. To further boost this prediction, Max Keiser sees the fact that billionaire investors George Soros and the Rockefellers are evidence that futures contracts could be used to build much bigger positions. They are going to be investing into Bitcoin, they're going to be investing in a blockchain technology, and through all of this, this is what's leading to the prediction of a long-term target for the virtual currency for Bitcoin to hit $100,000 based on this buying and selling of the banks, the buying and selling of these billion-dollar investment funds, and also the technology, which is being ramped up at an exponential pace as well. Real quick, touching upon the Soros and Rockefeller family venture capital firm to partner with the crypto investment firm. Again, earlier this month, it was reported that George Soros, a world-renowned investor and billionaire, will be investing in cryptocurrencies. Similarly, the Rockefeller family will follow suit by partnering with CoinFund. And so to be more specific, the Rockefeller's foundation venture capital branch called Venrock will be joining forces with CoinFund. And so we have here David Parkman, who's a partner at Venrock. And what David Parkman is saying is that we're really patient long-term investors. We're wondering what happens over the next 5 to 10 years. A lot of people are worried about the next 5 to 10 days and their numbers not doubling in the next 5 to 10 days. We have the Rockefeller family fund, Venrock, who's thinking 5 to 10 years down the line. And so what he goes on to say further is that it may finally be possible to build widely distributed networks without centralized trust or control. And this gives user consensus to govern the future. And in this scenario, what Venrock is recognizing, what the Rockefeller Fund is recognizing, is that commodity applications like messaging, social media, and application infrastructure like file storage and home computing become much more like public utilities. File storage, computing, we have Golem releasing their base product, allowing people to leverage their unused hard drive space. We are seeing further and further developments in the technology, as we are stating over and over again. And what these billionaire major funds are recognizing is that token holders are going to be public utilities. Token holders are going to be the ones who are given control of the future, the ones who get to decide consensus. You know, they're going to be one of the important groups of constituencies that are involved in this moving forward. And you can bet your bottom dollar that JPMorgan Chase and Venrock are also going to be putting their investments into miners. They're going to be putting their investments into developers. They're going to put their money and their investments into all of the different aspects of this technology. So real quick, speaking of the miners, interesting details that with the world's most efficient Bitcoin miner, the Halong Mining Dragon Mint T1, which processes 16 terahashes, is a 10 nanometer ASIC fabricated by Samsung Semiconductors, which no one had seemed to know until now. What's interesting is that Bitmain's S9s, I'm pretty sure, are 16 millimeter. And so these are much, much smaller compared to Bitmain. And what's interesting is that we have Samsung who's creating these. Samsung, which is now known, is in the game of Bitcoin mining. And with all of this investment into mining, people are looking at the price now. They're looking at the hash rate now. The hash rate is going to go up, is the prediction. And when that hash rate goes up, the Bitcoin price is going to follow, because that's the correlation that we've consistently seen since the very beginning of the Bitcoin blockchain. That as the hash rate goes up, as more people are mining it, it's taking more electricity, it's taking more energy. It's, you know, self-determining a higher value of this Bitcoin, especially when you consider the scarcity that happened in August 2016, especially when you consider the scarcity that's going to happen again in the next halving event in less than 2.5 years in August of 2020. And if we went from 1,000 to 10,000 in the past year, and we're talking about a $10,000 to $100,000 Bitcoin this year, then to keep with the John McAfee prediction of hitting that $1 million mark in a third year, we're talking about a 10x every year, 3 years in a row, going from 1,000 to $1 million, which is just unbelievable. And it's really no wonder why a lot of people think that, you know, there's something fishy about Bitcoin, that they think that it's a scam, they think it's a fraud. But really what's happening is that there is a huge amount of demand. There are only so many Bitcoins available in the world. And people don't understand the concepts of Austrian economics. They don't understand the concepts of deflation, because they've been programmed over multi-generations to, you know, look at inflation, or to think that the price of a unit of accounting is always the same, and it's just the goods and services that go up. And so it's this great deception magic trick where people have been focusing on the products prices and the prices of goods and services, and not recognizing the way money works or what money even is. Well, here with the mining, there's going to be a major shift, and that's why we're seeing a greater interest in mining technology. And this is one of the predictions, one of the factors that we're using in our prediction of what the Bitcoin price could be in the future. So we know Bitcoin is going places. We know blockchain technology is going places. We know the banks and the regulators and the corporations, the venture funds are all interested in investing across all of these different constituencies, across technology, across the tokens, across the infrastructure, across the developers. What's interesting is that we're finding out more and more, we've been hearing stories about this throughout the past year, throughout the past couple years, but it's interesting to recognize that the Bitcoin industry is stealing top talent from banks and even tech companies. And what's interesting is that it's not all about the money, is that there's a lot of money in blockchain, there's a lot of potential in blockchain, and at some point, someone doesn't need an extra 2 Lambos or 3 extra houses, and what they can do is they can focus on more than the money. And that's because many people want a mission and a purpose in life that aligns with their own ideals, and as we are very well aware, most corporations don't have a mission, they don't have a vision, and if they do, it's a 99% chance that that mission and vision doesn't actually include the values of real people. It's just corporate mumbo jumbo that's cold and very difficult for people to identify with, especially when someone doesn't have to stick with a company simply because they need the money. They can actually make decisions based on what's important to them without the fear of not being able to pay their mortgage. So as always, there was a lot of information there and a lot that we covered. There's a lot to go over and to unpack, to understand where are we at now, where could we be headed with all of the moves that these major players are making. So, and I'd love to know, what do you think? Do you think that the price of Bitcoin could shoot up after tax day? Do you think after people pay their taxes, get their bonuses, maybe get some refunds, that's when the country and when the world is going to look back at Bitcoin, Ethereum, and blockchain technology? This is when we saw Bitcoin and the cryptocurrency industry blow up last year, was just after April, between April and May. You could say it was in between the events of the tax day and in the mid-April and consensus, which happened in mid-May. And we saw huge explosions of growth in Bitcoin and Ethereum and throughout the entire ecosystem. Do you think that that pattern is going to repeat itself again this year after tax day, which is going to be less than a week again? What do you think about JPMorgan investing into blockchain? What do you think about George Soros and the Rockefeller fund investing into blockchain? What do you think about the fact that these major players are recognizing that the value of these tokens are going to be holding the tokens, and that the public utility factor of holding these tokens is going to make these holders decision makers in this world moving forward? Banks and funds and corporations are recognizing that in the future, decision making may not be a centralized process. In the future, we may have more and more decisions that are made in this decentralized fashion, in this distributed fashion, and in a way that's going to take into account the people who are actually holding these tokens. And when I say the people that are holding these tokens, I'm also talking about the AIs and the robots that are going to be able to live more autonomous lives, because they are also going to be able to hold their own blockchain wallets and make their own decisions in this new world of distributed consensus. All right, so with that being said, thanks for showing up. Hit that like button, subscribe if you haven't subscribed already, leave those comments below, and I'm glad that together we are minting coins.